But we also caught up with Samir Sikseria, the Chief Financial Officer, and Sudeep Kunnumal, the CHRO of TCS. And Prashant began the conversation by asking Samir about the company's margin performance in Q2, what drove it, and the outlook going ahead.
So, sequentially, our margins expanded by 70 basis points at 25.2. We got benefit from currency, which was about 80 basis points. We made investments. We said we'd prioritize wage hikes, and we have given wage hikes to majority of our population, almost 80% of it, and which was effective 1st of September. That, and combined with, we are having a higher outlay of QVA. Both put together is 70 basis points. And we got benefit from rebalancing of our pyramid, which was about 40 basis points, and the balance 20 basis points came from operating efficiencies. So that's the overall split on margins. One thing, between H1 or in H1, we have improved totally 100 basis points. So Q1 was an improvement of 30 basis points, and incrementally the 70 makes the 100. The severance pay cost is an extraordinary, that's an industry practice. It's a one-off called out, that's not included in it, and we have called it out separately.
What will margins look like in Q3? Because there will be a 2-month impact of the wages.
Absolutely.
And investments that you make.
So we have improved 100 basis points in H1. We'll look forward to inch closer to our aspirational band, our guiding beacon.
But you think you can improve margins and absorb the wage hike even in Q3?
There are a couple of things. There would be puts and takes into it. There would be headwinds. You called out one of the headwinds. We'd also be making investments. We talked about pivoting to our new vision. And towards that, there would be investments needed. And at the same time, we'll be focusing on doing a disciplined execution and leveraging on our operating parameters. We want to inch towards 26.
So this rebalancing of the workforce, and we spoke about that briefly with Kriti as well. I said it'll continue, but it's not driven by cost, etc. But it'll continue through the course of this financial year. Can you put some numbers to it? Do you have?
Yeah. So Prashant, first and foremost, it is not on cost. It is not because of AI. That's something that you want to really get the facts right. And as we speak, this quarter, we have onboarded close to 18,500 employees, which means fresh hires, new hires, right, between laterals and those from the campuses globally. So we're continuing to invest to get to the mission that we have really said to be the world's largest AI-led tech services company. The specific program that we mentioned about, where we are looking at around 2% at the mid and senior level. As of today, we are midway through that. So approximately 1% of the people at the mid and senior level.
6,000 people?
Yeah, approximately. That's a number.
So you're saying midway, so 6,000
yes,
more?
So see, again, that's very important, because we are not really fixed on the target of saying that we will let go 2%. That's an estimate that we had communicated, right? So what we are at 1%, and what we do is constantly, while we invest extensively on building capabilities, making learning accessible to everyone, providing all the support that they need to be able to transform and take up these future relevant roles. If after all these efforts that we are not able to succeed doing that, that's the only when we will actually do, right? And like I want to again stress, we take it with a lot of responsibility, do it with a lot of care, and all the benefits, support that we have done are industry benchmark, truly resonating with what we stand as an organization. And then we'll continue to do it very responsibly.
Sudeep, what's the annual saving on account of this employee rationalization?
It is not about saving at all.
No, it's true, but do we have a number?
No, we don't really have a number. To be very honest, yes. It is purely from an effort to be future ready.
No, I agree. That's the motivation behind it.
The cost is not driving it at all. I want to say that.
So you want to tell us? I mean, there would be some savings, right, on the employee front. But unintended consequence, but it's there.
I talked about 70 basis points coming in from rebalancing of pyramid and higher QVA. That's the number.
And actually, again to say, because it's not a question, when we have announced, truly like as a company that we always did, we are ahead and we have announced salary increases, we are paying higher QVAs. So this is not about cost at all.
There was so much to discuss with the TCS management this time, whether it's about demand, whether it's about their investments in the AI ecosystem, the employee rationalization, and the management CFO talking about inching towards that 26% margin band. Very categorical there. Currently, they're at 25.2%. Get into